know my idea of a beautiful picture? Check out the chart of Take-Two Interactive, TTWO, the video game company that's best known as the developer of Grand Theft Auto. But in reality, they have a ton of other incredibly lucrative franchises: Red Dead, Mafia, Borderlands, Civilization, some terrific sports titles under the 2K label, among many, many others. For a long time, investors simply couldn't get past the fact that Take-Two is a relatively small game developer, at least compared to Electronic Arts or Activision. That's nevertheless responsible for one of the hottest franchises of all time. The proof is in the pudding. They haven't released a new Grand Theft Auto title in 3 years, yet Take-Two stock nevertheless managed to almost double over the past 2 years. In short, this story is a heck of a lot more than just that one game. Now, I've been saying this to you for ages, but if you didn't believe me, Take-Two gave you still more evidence that it's thriving when it reported a solid quarter last night. The company delivered a much smaller than expected loss. Far more important, they posted a phenomenal 51.2% gain in bookings, which I think is the best way to judge this company's health. In short, Take-Two had a terrific holiday season, confirming again our thesis that while the mall may be desolate, consumers still can't get enough video games as part of their new stay-at-home economy. Yet Take-Two has been an amazing performer. These gains were gettable. The company's fantastic CEO, Strauss Zelnick, first came on the show a little more than 3 years ago. Stock was at 17. Since then, he's continued to appear on Mad Money pretty frequently. How about a 216% gain during that period? Can the stock keep climbing? Let's check in with Strauss Zelnick, Chairman and CEO of Take-Two Interactive, to learn more about the quarter and his company's prospects. Mr. Zelnick, welcome back to Mad Money. Good to see you, Strauss. Have a seat. All right, I kind of want to dispense with Grand Theft Auto, but I really can't because it's such a phenomenal title. I was on the Disney call this morning, and there's Bob Iger, a terrific CEO, talking about the Star Wars, the Lucas franchise, what they bought with more. Grand Theft Auto is one of those kinds of properties. It just doesn't quit.
Yeah, it's a powerhouse property, and it's beloved around the world. And now the Grand Theft Auto 5 release has sold in 75 million units. It's extraordinary. And at full price, by the way.
Right, full price. And you have ads, you have additives, you bikers, you do a little import. I mean, there's these things that people pay extra for. They love.
Well, Grand Theft Auto Online is free to play. Right. But when you're in the game, you can buy virtual currency. And when we drop new great content into the game, it increases engagement. That increases virtual currency sales. So we just had a record quarter for recurrent consumer spending, and that was partially driven by Grand Theft Auto Online.
But I want to talk about what that allows you to do. It gives you the freedom to take risks that other companies can't, because you have a catalog that I think is actually worth the $5.4 billion valuation of your company. You're taking risks. You're buying a social mobile game that I think is very exciting, but people hadn't heard of.
Right. So catalog in the last quarter was 36% of our total bookings, and a healthy entertainment company has catalog revenue and the earnings related thereto that support its operations, just as you said. And that allows you to take measured risk with your frontline offerings. Hopefully, more often than not, you're right in taking that risk. Certainly at Take-Two, our track record has been very, very strong in taking measured risk with our frontline offerings. But inevitably, you don't get everything right. And a well-financed entertainment company can live to play another day.
Well, look, I think that last time you were on, Mafia 3 was about to come out. Unprecedented sales there. And that was artistry, but also edgy, and it paid off.
It was edgy. A great story, African-American protagonist. It sold in 4.5 million units, fastest-selling release in the history of the 2K label. It's now sold in about 5 million units. We have more content coming. Mm-hmm. We're really happy with that release.
You are a man who is humble, also runs scared, and is never willing to say that something big could be occurring. But you use a term, it's code, I think, for you, is my take after seeing you many years. Eagerly anticipated, which is Red Dead Redemption. You use it twice. Eagerly anticipated means that you think there's going to be something big.
Well, eagerly anticipated for me is better than cautiously optimistic.
Okay, good, good.
and look, everyone's excited about Red Dead Redemption 2. Coming next fall. Red Dead Redemption sold 15 million units lifetime so far. Okay. It's a great title coming from Rockstar. And, all of us, consumers, all of us can't wait to see what it looks like.
Now, I need you to talk about this notion of entertainment. I want to put it in the context of Brian Goldner, who was on our show earlier this week. He's the CEO of Hasbro. And he is saying, listen, we are not a toy company. We're an entertainment company. Now, I'm thinking of flipping the whole thing. Why can't you be an entertainment company that extends to everything else? Hasbro is a big company. You could be making movies. You could be making toys, games. Now, I know that there's such a thing as loot. But if you stood the whole company on its head, couldn't we have all these great movies?
I think the answer is our intellectual property probably would form the basis of some great motion pictures. The question is risk and reward. Yeah. And motion pictures as an asset class doesn't begin to measure up to the video game asset class. We also are of the view, first, do no harm. And we want to make sure that everything we do stands on its own as a great creative property. We think we know how to do that with video games. Our company's background is not in motion pictures. My own personally is, but the company's is not. I don't mean to interrupt you, but I think that when people need to know, Strauss, that it isn't that you are you don't know that world. You literally are from that world, and you know that this is a better business, right? Right, and to take a leading franchise and try to express it in another medium is a big effort, not a small effort. Okay. Not one would enter into lightly. But I agree with the notion that over time we should speak to broader elements of the entertainment business, and that's what led us to the Social Point acquisition. Because free-to-play mobile is a $40 billion market, we need to be exposed to it in a smart way. We think it's a smart way because, among other things, they own their intellectual property, and the deal's immediately accretive to bookings and cash flow.
How was that possible that you were able to get this at that price so that we could raise numbers next year?
Well, I think the answer is that it's a fair deal for both sides. That's the only way a deal occurs.
And they got stock.
And we did have stock so that we aligned interests. I'm hopeful that the Social Point team who are staying on felt that it was a great cultural fit. We certainly did. I think our comfort with each other and the fact that the strategies are aligned, own your intellectual property, try to delight consumers, focus on making the best-in-class titles, that aligned our interests.
All right, I'm going to say this because you always say, Jim, it's your idea about the stocks. I run the games. EA is at $25 billion. Activision's $29 billion. Your company's at $5.4 billion. That makes no sense. And I'm not saying that those guys are too expensive. I'm saying that this one's too cheap. Strauss Zelnick, Chairman and CEO of Take-Two Interactive. Mad Money's back after the break.
Thanks, Jim.
Thanks. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.